Good morning, 6:06 a.m. Pacific Standard Time, 6/14/2012, pre-market cash market, but pre-market with cash futures with a triple witch, quadruple witch in play, quarterly, second one of the year, yes, mid-year with the Greek crisis and everybody in the professional community. Well, you need to learn how to control yourselves. And we will start there. And if you want to learn any more thereafter, then just contact us. Now, let's get down here. We're going to take a look at where this NASDAQ 100 is. And it's a market maker, index market maker. So when you take the NASDAQ 100 right here, and you take a look on its daily chart, what the public is going to look at, and institutions and everyone alike, this is where we got that upside rally that we did together. And then we got the short days and the up days, but you can see that still, where would stop market orders be triggered with the general public? Where would that fear escalate? Right now they're discounting the Spanish yields, and other yields, they're extremely high. Where normally your gap, you'd have a huge gap down right now, but you don't in the cash market. S&P is up 1280, 1311.60. Dow Jones up 21 handles, 12450. NASDAQ futures, we already know, that's going to be 2526, up 3.8. And so the thing about it is, how would we come down and test these lows again within the austerity drama going into calendar earnings and everything that the professional community is fretting over at the moment? We are market makers. And we make markets based on the pre-market cash futures. So if we're going to sell down through here, meaning that when this breaks support level, there's a price here. And when we go back over here, we know the low in this market was 24.43 when we started getting net long up and out of the money. Then what did we do? We still were hitting lows the following day on 6.5, okay? And you can just see here, but this low here became 25.04, okay? So what I'm going to do is I'm going to draw a trend line for my MMTs live here right now, just so that they would know what this top end of that move was. But most importantly is where the lower end of this move was from that gap sequence. Because the public, look at, if I show this chart to the public, I'm going to get 10 different interpretations. Listen, it's a standard chart. What I'm showing the MMTs here is that if you break below these key moving averages, the public is going to have a response. And they're going to sell down to the next support levels. And when you get down here, then the broader equity market, like the price lines in the Googles and the Amazons, and, you know, there's plenty of them that we do, Apple and all of them, will have a range in this triple witch starting day 4 in 20 minutes. The markets will be open live. And yes, they'll be highly manipulative. And the bid and ask ranges that we displayed, they're $3 wide. We only see this before a huge move one way or the other will happen. A bigger downside move and or a bigger upside volatility gap. Right now, we will have Mr. Bernanke coming out next week, or the Fed, or whatever you want to call them people. But they're going to come out and they're going to probably say, hey, we'll be very accommodative because, one thing about it is the banking system has to have that collateral payment system implemented worldwide where you don't disrupt the payment processes in the banking system. Now, if we break down, we're going to come down here, and then we're going to go over here now. Here's a 25-10 call. They're gapping it up, but it still doesn't matter. It's a triple witch in the last print. See, they got marked down good. The high was $48. The low was $23. That's on that 25-10 call. NASDAQ 100. Here you go. 25-25 call. What a markdown. 36.40 got marked down here to $14. Yes, it did. 22.40 range. $25 range over here on that 25-10 call. But look at the bigger pair of the 25-50 put. And based on the flat cash market opening bell and the lack of conviction herein based on your professional community out there, is that premiums will be manipulated in price. Yes, it is true. It's not fair to you or the public or anyone else for that matter when they're that wide a range because you don't know what to do in that case. But it's very important that you learn that when cash markets change, you change with them. And there is a lot of pent-up fear in the indexes right now. And when you go long off of the bottom today, you will look for the long side will be 5 teeny range and then reversals right away. Okay, once you get the breakout of 3 teenies off that bottom, whatever a teeny is, it's $1.20 and you get 3 teeny breakout and you go through it, and that thing is thromboning at 95 IR and higher, you know you're on your way to 5 teenies. MMTs. So let's give the bid on all sides of the market here and now. Let's give the bids in the cash market on the 25-10 call, 25-25 call, MMT, and that 25-50 put. Now, with a flat opening bell is how do I be a market maker and how do they mark down both sides, okay, and the things that happen when this occurs, okay? So you mark down both sides, and that's what they've been doing all week in this triple witch. Index option trading, making markets, that is. All right, on that 25-50 put, let's go ahead and mark these bids down here for right now. We're going to start lining these bids where we had an MMT having orders out the other day, and that's going to be the low end of 1280. We can make a range higher than that, and that would be the 1470 area. And this is based on, though, that you gap up in the cash market, but that they still the premium like they do in triple witches. So, yes, the last print was 26, but look at yesterday's low when we were buying down there, up to 32. Now, yes, they have a 6.60 print on 3,584 was the volume. They had that close at 1940, and they ended up working that thing down there, and then they were range bound and go up $3, come down $2, go up $2, go down $3, come back up $4. Because lower on balance volume with the general public right now. S&P cash market is only up to 25-25 call. Even though that they marked these down to $14, where am I going to put my bids right now? I'll tell you what, because it is a triple witch. There's a cash market right below here right now at $6.80, and you need to get down with it. put those bids there. Why is that? Because if we slightly gap up, hey, and they were to sell down on volatility, that would be that lower cash market, and it would have a verification model to it based on the diminishing, not the diminishing, the diminishing gap that you get. You sell right into it, and bam, they break down. And if the general market is going to break down, then that means that this NASDAQ 100 chart goes back down into these prices. But you'll use your MMT application. That will tell you everything. This is just a standard view of what your public model will be engaging with. It's the only set of tools I have. It's unfortunate, though, because of high-frequency computing cycle machines, that standard technical analysis has been manipulated over time in price ranges. Because what ends up happening here, people make lots of decisions here just by looking at this. You can't, I mean, yeah, you can, what we look at it for is where the general public will all make decisions at about the same time. And they will when you go below the daily moving averages there. That will be their response. And if that's the case, we meet that criteria here in about 12 minutes from now on a triple witch on a Thursday opening bell at 6:18 a.m. Pacific Standard Time, live 6/14/2012. And what is it all about? Ringing up those cash profits. That's the index. Now, here on that call, they can steal that bid. I want alarms also set right here, falls 2. And here's where I want the alarm set. Last print is 1850 on that 25.25. That's the last cash print. Okay? Range 2240 the other day. 607. Set me alarms, falls to 1670. That's one alarm. So if it falls below it, falls 2. Set another alarm at, let's make that 1320. Okay? Falls to 1320. And set those alarms for now. Okay? And we're going to see what kind of premium they take out when that NASDAQ hits support. Lower on balance volume creates a totally different price print, and each individual 2510 call, 2525 call, 2550 put, index 100. And how do I trade that index 100? Both long, I make money. And when the index wants to go down in value, I make money. The manipulation in the price prints in these option pits or market maker pits, whatever you want to call them, exchange pits, I'm telling you, right now, they can walk away. They could do all kinds of things in a triple witch, and it's going to be highly, highly manipulative on a flat cash open gap up, but no gap open down. That means that people are not committed to the opening bell. And we're going to open in 10 minutes. And so what I'm really going to tell people here to do is line the lower bids. Because if we go up, and these have got to meet our criteria, you got to sell down in the NASDAQ 100, and we would love to get into this 2510 call if we meet that criteria. We would love from that 2763 print. We'd love to start lining our bids right around that 1460 area. Yes, we do. Going into the opening bell, 9 minutes. How to trade triple witch index options, NASDAQ 100 index options. So you're becoming a market maker in the index. That's 100 stocks of the NASDAQ composite. Combined price volatility and directional movement. That's one piece of it. The other piece, though, the most important part, is how they steal premium out of both sides of the market and how they take both sides of the market from the public. And you want to be the 1% that is making money on the other 99%.